What's up everyone? In this video, I'm going to cover why Facebook stock is a screaming buy for me. I'm going to cover what happened in their recent earnings report and some important things to know about Facebook on the good side of things and the bad side of things. So Facebook stock is up 17% today, which is awesome to see. They're booming up. But when we zoom out, their stock isn't looking the best. Over the past year, they went from highs of $384 back in September of 2021 all the way down to lows of $169, which was yesterday, April 27th. So it's been a pretty tough ride for Facebook lately, but this has also presented a pretty awesome opportunity in my opinion, and we're going to cover why that is. So let's take a look at Facebook's recent earnings report. It was pretty good for the most part. They beat on their earnings per share. They missed a little bit on their revenue. They beat on their daily active users. They missed on their monthly active users, and then they beat on their average revenue per user. So overall, it was a decent earnings report. One thing that was pretty notable in my opinion is that Facebook lowered its total expenses guidance for 2022 by a pretty decent amount. So originally they were expecting to have between $90 billion and $95 billion in total expenses, but they said, you know what, actually we only expect to have $87 billion to $92 billion in total expenses. So that's good to see there. Overall, it was a decent earnings report, like I said. Looking more at Facebook's fundamentals, their revenue has been growing like crazy over the past 10 years. In 2012, they had $5 billion in revenue. In 2021, they had almost $118 billion in revenue. And I know that's like over the course of 10 years, but even if we look at Facebook from like 2017 till 2021, their revenue went from $40.6 billion to almost $118 billion. Like, they are still growing like crazy, even though they're already a giant company. Like, they're growing like crazy, and they're pretty profitable too. Their cash flow is just massive, which gives them a ton of opportunity to reinvest back in themselves, or like buy back shares, or just do other things to benefit shareholders of Facebook. They have been buying back some shares lately, which is awesome. Their gross margins are 80%, which is mind-blowing. Their net margins are around 33%. On top of that, they're expanding a lot into the metaverse, and they're just adapting quite a bit. When you think about Facebook as a company, I know that their stock tanked down significantly in the last quarter for a couple reasons, but one of the biggest concerns from a lot of shareholders is that their their user growth overall was slowing. And when you think about Facebook, like obviously they own Facebook, but they also own WhatsApp and Instagram. And when you see that they have monthly active users of just under 3 billion people, like that is an insane amount when like the entire world population is like 7.7 billion people. Like basically everyone in one way or another uses Facebook when you consider how many people actually have access to the internet and where Facebook is actually accessible. So there's just a ridiculous amount of people that actually use Facebook, and not too many other companies out there can say that they have almost 3 billion people using their product every month. So that's awesome in that sense. They're a powerhouse company, whether you like them or not. I know a lot of people don't like Facebook as a company, which is totally fine. I understand that. But that doesn't mean that their stock is not undervalued. For example, a lot of people hate on Facebook because of, there's many reasons they hate on Facebook. But at the end of the day, they print a ton of money. And even though there's a lot of people that may publicly disagree with Facebook, they still end up using Facebook services and platforms and software and all that stuff. So they're just printing money, no matter which way you look at it. Even when we look at some of the more in-depth fundamental metrics, we can see that they have around $16.6 billion in cash and cash equivalents. They have around $66.7 billion in total current assets. When we compare that to their total liabilities, it's only $41 billion. So it would be hard for them to go out of business at this point. Also, if we scroll down, they've been buying back shares, which is amazing. That'll be very, very beneficial to their shareholders, and they don't plan on slowing down those buybacks anytime soon. So, they're printing money. They have a ton of cash flow. Their gross margins are insane. They're buying back shares. Their revenue is growing. They're expanding into the metaverse. They have Oculus working for them, or they own Oculus. They straight up changed their company name from Facebook to Meta Platform. So it's like they're adapting. They're adapting and they're printing money. On top of that, the stock price is significantly lower. They're trading at, according to TradingView's data, the lowest price to sales ratio ever. So that's awesome. It's like like no matter which way you look at it, it's a pretty good buy at this valuation. Even if we look at some of these price targets on Facebook, I was inputting some assumptions for Facebook, and let's say you wanted a 10% return every single year on your money, and let's say we look at the base case where you only assume that Facebook would grow their revenue by 9% every single year for the next 10 years. And, keep in mind that Facebook is continuously looking at different ways to increase their revenue, but they're also expanding into what appear to be very big revenue driving businesses, like everything they're doing with the metaverse and things like that. So there's a lot of potential there. I know their Oculus side of the business / virtual reality is really starting to boom up too. So that's awesome. On top of that, let's say you only assumed a profit margin of 31%, which in my opinion is pretty conservative considering that their profit margin right now is 31%, and over the years they've done nothing but basically increase their profit margin. So even if you wanted to be very conservative and make it even lower, like let's say we brought it down to 29, and then you still assumed a PE ratio of 12, free cash flow margin percentage of 31, but let's also bring that down to 29. And then price of free cash flow of 12, it's still a buy signal. That means you could pay $253 or lower to get a 10% return on Facebook every single year if these assumptions are correct. And right now, Facebook stock is at 205. So it's like, it's a pretty good deal if you believe these assumptions, but let's say we wanted to be even more conservative. Let's say instead of 9% revenue growth, let's say we said 7.5% revenue growth, and then instead of having a PE of 12, let's say we bumped it down to 9 and then a price of free cash flow of 9. Then it lowers the base, but still, it's no matter which way you look at it, for the most part, if you have any reasonable assumptions, it appears to be at a good valuation. Now, again, that's very conservative numbers. Let's say we bumped the profit margin up to 31 again, then the base target goes up to 205, which is the current level. So it's like, if you believe these assumptions, Facebook is a buy right now. If you can believe Facebook will grow, it will have revenue growth of 7.5% every single year for the next 10 years, profit margin of 31%, trade at a PE ratio and a price of free cash flow ratio of 9, and they have a free cash flow margin of 29%, or let's say we bump that up to 31 too, Facebook is worth the buy. But again, it depends on if you believe these assumptions. On top of that, this model is not even including the repurchasing of shares, and that'll be huge considering how much free cash flow Facebook has and all that stuff. It's like there are so many different ways to justify Facebook being at a good level. For that reason, I have been buying shares of Facebook. I've been saying this for a couple weeks now, if not a couple months now. I have been selling some puts on Facebook as well. I will continue to buy up shares of Facebook, and I will continue to sell puts on Facebook. Like I said, all these numbers, for the most part, are pretty conservative. On top of that, it's not even accounting for share buybacks, which they're definitely going to continue to do. It's looking pretty good in my opinion. I know some people might disagree, but that's all right. I think it's at a pretty good level, and I'm very excited that we have this opportunity in the market. So let me know if you guys agree with me, disagree with me. Let me know what you think in the comments down below. Also, if you want to access our stock analysis dashboard and calculate your own price targets for Facebook or any other company, make sure to check out that first link in the description and the comments down below. You can see all the data you can possibly imagine for any company out there, and you can see it all in a very customizable and easy to access way. The data loads extremely quickly. Let's say we type in any ticker like Apple, press enter, and then we have all the information we could possibly need. You can see it on an annual or quarterly view. Check it out. It's going to be that first link in the description down below. It's an awesome tool. I use it every single day. Besides that, thank you guys so much for watching.